To another chat with Nat. It is so dreary outside. You can kind of see in the window outside, but it has been raining for days here in California. And that's not something that happens here usually. We don't usually get weather. So I'm so tired. I don't know if it feels like just the weather is making me so tired. So anyway, I've got my coffee. This is a Christmas mug. It says love on it. So I'm sharing the love with you all this morning. If you guys have any questions, just chime in. I'm hoping that I'll be able to see the chat. Let's see. There we go. So I wanted to talk to you today about creative ways to buy a house because it is a tough one out there, folks. It is. It has been so competitive, and in the last year when it was uber competitive, I had mostly sellers, and so now that I have buyers and it's still competitive, I'm thinking, wow, this is really tough for all of these people out there trying to get a house. So I thought that I would come on, and this is specific to Ventura, as far as the market right now. Ventura just has a lot of cash in the market right now, I feel like. So there are a lot of investors. There's a lot of people that have sold their house and we're waiting for a good time to buy. And so there's a lot of competition right now, particularly in the first-time home buyer, like $700,000, $800,000 range. And then even some of the fancy homes, the almost $2 million homes, those are selling pretty well too. So as long as you're not pricing it outrageously, it's going to sell. So I thought I would come on here and give you some creative ways to buy a house. It's not going to work for everybody, but these are just some ideas, and it probably works better in other markets than Southern California. But I figured I would put these ideas out there and maybe get your creative juices flowing as to how you can purchase a house. So the first one is crowdfunding. I know what you're thinking. You're thinking, isn't that for performers trying to raise money to write an album? Or isn't that because somebody has some unexpected medical bills that they're trying to raise money for? Isn't that for, like, we have introduced the idea of crowdfunding, and people do it regularly, and nobody's really thought about doing it for houses and for homes, for down payments, to help people buy houses. But what's so funny is there's already companies that are out there doing this. There's already websites that are specifically devoted to helping you raise money for your down payment for purchasing a house. So here in Southern California, if your starter home is $700,000, you need quite a chunk of change in order to even put an offer in on a house, just to put earnest money down. Not to mention you'll get, private mortgage insurance and all that stuff tacked on to your monthly mortgage. And so you have to make a lot of money, and you also have to need to have a lot saved in order to purchase a house. So that's where crowdfunding comes in. So people can be a part of this journey. It'd be a great link for you to send out to all of your friends and family. I think this would be an amazing thing to do if you were a newlywed. A lot of people will crowdfund for their honeymoon, but why not crowdfund for your first house? I mean, this way you'll build equity, and you can take your spouse on a lovely vacation after a year when you have already built equity in that home. So, second thing that I want to bring up, these are my notes over here, guys. Yes, I hand wrote my notes on a piece of paper that I ripped out from a notebook. It feels so 1997, but that's where I am today, guys. I had to write it down, otherwise I wouldn't remember what to talk about. So, second one is rent to own. We've all heard about these like random situations where you're landlord says, would you like to buy this home? And you've been renting it for 2 years, and then they apply all this rent money that you've paid towards the purchase price. And it's just like, this only happens in Hallmark movies. And you're like, that doesn't happen in real life. But surprisingly, a good friend of ours, they had been renting a house for years and years. And the son lived, an hour and a half away. The mom had passed away. This was her home, the home that he had grown up in. He never wanted to sell it. This was his mom's house. I just love it so much. They kept renting year after year. They would say, if you ever want to sell it, we would be willing to buy it. And it continued and continued and continued, and years and years and years passed. And finally, he said, yes, I will sell it to you specifically, because you guys have kept this home in great condition, and you just have a special place in my heart. You've already built the relationship, okay? Because you've been making your rent payments on time. You've built this relationship, and they know who you are as a person, and they want to invest in you, investing in your first home. So, this sweet guy even said, I'm going to get it appraised, and then we'll think of what price we want to do. And he got it appraised, and he said, that's too much. I think it's actually worth blah, 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 and you can have it for that price. So it just was like a story that you hope happens out in the world, but you've never heard of it before. I know, some people think of their landlords as greedy or not caring, but I think you'd be surprised at the mom and pop landlords, how much they really are invested in their renters. So this isn't always the way that it happens. There are sellers out there that would be open to doing a rent to own. Now, if their property's been sitting for a while, it doesn't happen a lot in Southern California, I'm just letting you know now. But if you see a house that's been sitting on the market for a while, why not make the offer of, hey, I don't have enough for a down payment right now, but if you rent it to me over time, I will be making payments to you, and we can consider that like a mortgage. Now, there's a couple ways to do it. One is you buy it and it's seller financing. The other is to rent it and then purchase it in the future. So I have heard of people locking in a price. So, in 2025, I'm going to start renting it for this amount of money. I'm going to rent it for up to 5 years, but I have first right of refusal to if I can purchase it within that time. Okay. You can't sell it to anybody else, only to me in this 5-year period or 2-year period. And I'm going to see if this investment works for me. And if it does, then I will purchase it from you. So you could lock in a price and then say, okay, well, I might buy it in the next 5 years, but this is the price that we agreed upon. And it may appreciate during that time. And what if it appreciates $100,000 in 5 years? Then you've already put that in your pocket. Now, the seller, they just want that money coming in. And then eventually they want the big payout. So for them, it works well too, because they already have somebody on the line that will potentially buy it. But they're not losing any money in the interim of not renting it, because they are renting it to this person. So that's another way to do it. I touched a little bit on seller financing. Okay, so this is where the seller will sell it to you, but then your mortgage is with the seller, basically. So you put a certain amount of money down, because obviously the seller is not going to let you do it for 0% down unless there's an act of God. I don't know, a miracle that I haven't really seen that, but usually you put a sizable chunk of money down and then you pay your mortgage to the seller. Now, if current interest rates are 7% and this seller doesn't necessarily need 7% on their money, they would be fine with 5% on their money. You could get a sizable reduction in your monthly payment, having a lower interest rate with the seller as opposed to a credit union, a bank, etc. So it's a really great option. It's something that you can discuss with the seller. Now, most sellers want their money right away. So if it's somebody that's been living there as their primary residence and they're going to go buy something else, they need that equity cashed out most of the time. So if they have $300,000 worth of equity in that and they want to go buy something bigger, they want to transfer that equity over, then they're not going to be as open to seller financing. But if it's an investment property, or if it's somebody that's older in age and they want some, stability of income coming in, this could be a great option. Also for a seller that has a unique property that may not qualify for bank or credit union financing because it's a fixer or it's a really unique property. It's not cash flowing right now. There's many reasons why it's maybe not as desirable to get conventional financing for it. So, it's just something to think about, something to put in your back pocket. Maybe you bring it up, maybe you don't. There was a deal recently. It was a ranch, small house on it that was being rented out, but then the orchards were grossing a decent amount of money, and the seller wanted their money out, and they agreed that they would do seller financing. But on a $4 million ranch, you had to come in with $3 million, and he would finance the last million. So not feasible for most people. They don't just have $3 million lying around. But if you were 1031 exchanging into that and you only had $3 million and you needed to exchange those funds, maybe that would make sense to you to do seller financing for the last million. So speaking of ranches, the other thing that you can think about is some of these government loans. So in particular with a ranch, you might qualify for a USDA loan. So USDA loans are for particular parts of the country and mostly in rural or suburban areas. So there is a map that you can check out. If you just type in USDA loan map, it'll come up, and you can type in different addresses. You can look at different neighborhoods and see where these cutoffs are. Now, I think it's something crazy like 97% of America is in these areas that you can loan to for USDA loans. It's just not metropolitan areas. So these loans have very specific requirements though, and you may not qualify. They are not for the average buyer. They're for things that it's very hard to qualify for them. But if you did qualify for them, they'd be an amazing loan because they're 0% down. That's amazing. So you would have to be able to make that payment, but then also not make a lot of money. So it's kind of tricky how you would qualify for that, but it's a really great option if you qualified. The other 0% down is a VA loan. So if you are a veteran, if you're active duty military, this is the one for you. They have changed some of the regulations in the last couple years about termites in particular is the one I'm thinking of. But it makes it even easier for a seller to accept a VA loan. So in the past, VA had a couple of different things that were issues with the appraisal. It had to appraise at the value or more. And then it also, sellers had to pay for any termite. They needed to have a termite clearance on the property. I think those are, when we were in such crazy appreciation days where homes were going up for 5% more than the last one that was sold, and then 5% more, and then 5% more, and then 5% more, and sometimes our appraisals weren't keeping up with how high prices were going. It was really difficult for a VA loan to qualify for a house that was expensive. So nowadays, I think with our prices stabilizing, some areas are even coming down just a hair. That's a better option. Also now buyers can pay for the termite clearance. So it gives sellers a lot more confidence that this loan is going to close. They used to have, I'm not a mortgage person, okay? So go talk to your mortgage person, but they used to have a certain cap on the amount that you could loan. I don't know that cap is there anymore. I think that's to keep up and to, keep up with the inflation, the appreciation, the crazy prices and stuff like that. So mean, for 0% down, if you can qualify for that payment, that is an amazing loan. And I'm so glad that we offer that to our veterans and our active duty military. So if you're in that qualification, I would definitely talk to your loan officer about that. Another one is an FHA loan. So, of course, you've always heard all these realtors talking about, do you need 10 or 20% down to buy a house? No, you need 3.5% down. And that's true, because an FHA loan, you would only need to have 3.5% down. There is a new program out that I'm not that familiar with that would even give you down payment assistance for that 3.5%. So if you qualify for that, it can be a great option. Now, a lot of banks and lenders are going to have opportunities for you to pay less than the 10 or 20%. But again, you may have to pay private mortgage insurance. So you're paying an insurance amount on top of that mortgage in order that you don't default. But of course, then that makes your monthly payment more. It makes it harder to qualify for it. So it may not benefit you. Just talk to your mortgage broker, your lender. Now, I want to bring this up though. Don't talk to one, okay? Don't talk to one lender. Don't talk to one mortgage broker. Talk to multiple, okay? Go to your local bank. Go to whoever your realtor recommends and take their list of mortgage people and call at least 3 of them, because they all have different programs. They all have different benefits and different drawbacks. So you may say, oh, well, I really get along with this person really well. And, I think they're really on it. They've qualified me for this amount. That's amazing. I'm just going to stick with them. Little did you know that credit union had a 1% difference in the rate that they were offering. So you would have had a way lower mortgage payment. You would have qualified for more. You just don't know until you talk to more people. You want to talk to as many people as, I don't know about as many people, but you want to have options, okay? So I've also had it where one lender can't perform on the loan while you're in escrow, and it's taking forever. I have seen buyers switch halfway through and say, you know what, this person isn't getting it done. I'm going to go with this other person. And boom, within 14 days, within 21 days, whatever it is, the other lender is able to close the loan. So if you've already started the application process with multiple lenders, it'd be much easier to switch halfway through if something's not working out with one, Not to rag on the big box banks, but they don't always look at everything up front as thoroughly as a different lender would, and that can cause problems down the line. And so I've had one B of A, one Wells Fargo, these 2 transactions. It took way longer than they promised that they were going to get the loan done. Oh yeah, 30 days, no problem. And both cases went weeks past where we thought it was going to be. So, if they had another lender that they were qualified with, then they could have just switched over and maybe gotten it done by the deadline. But instead they had to pay. In one instance, they had to pay per diem. So that's a little tricky, and you don't really want to have to do that. So that is to say, contact multiple lenders. Now, you're worried about the credit score getting dinged every time you talk to somebody new. But let me tell you that if you get all of them within like a 2-week window, they can tell the underwriter, hey, they were just shopping around. So if you're going to do the mortgage thing, if you're going to go get them all done in a short window, get all your applications in, which most people do. I mean, most people are deciding they want to buy a house. They get with a realtor. The realtor says, talk to these mortgage people and get your application going, and then we'll go look at houses. So I would say the majority of people do that without knowing, but this is just something that if you're just starting the process, that's good to know. Okay. Where are we? Okay. I don't know if you remember that TV show Touched by an Angel, but if you go to Silicon Valley or any Austin, Texas, any of these venture capitalist areas, you're going to hear the term angel investor. Angel, okay? Angel investor. They're just this heaven sent investor that gives you money to start your business or buy your home. And they're just a gift from God. But you may think, well, how does an angel investor help me in this situation? Well, angel investor can be anyone who wants to invest in your home buying relationship. So you may have a mentor, a older, wiser person that wants to see you succeed, and they may throw in some money for you. Oh, you need some help with the down payment? Here you go. You may have a brother, sister, mother, cousin, aunt, great uncle, who just really wants to see you succeed. So they may throw in some money as a gift. So if you needed, 20 grand, an extra 20 grand to get into this, maybe your angel investor could help you with that. And I mean, what's that saying? The door never opens to those who knock. There's never a yes to somebody that doesn't ask a question. So really you need to start by reaching out to people, and, it doesn't have to be, hey, will you give me money? But just, hey, we're buying our first house. What do you think about that? How could we be creative about that? What are your thoughts about us buying a home? Now you're going to get a lot of unsolicited advice, but once in a while someone's going to say, oh, well, I'd love to help you with that. So ask and you may receive. You're not going to receive anything if you don't ask. So you might as well see what their thoughts are and see if they can help you in any way. Going along with that is this idea of fractional ownership. So let's say your angel investor wants a piece of the pie. So there are even companies right now that will buy your house for cash, and then you work towards buying it from them. There are other ways where they will put in 10%, like let's say they give you 10% of the purchase price in cash to put down, then they own 10% of your home. So when you go to sell it, they get 10% of the profits or the losses, because this is an investment. So you may win, you may lose. So there are various companies out there right now that are doing the fractional ownership. So they will partner with you, and when you sell, they're getting profits or loss. I mean, you could probably even buy them out at some point, depending on your contract. So it's something to think about. It's a non-traditional way of purchasing a home. And I don't know, they're probably not doing a great job of marketing, because I don't know about many of them, but I know at least one or two. So something to look into if you think that partnering with a company to purchase a home or an investment is a great idea. So another option is co-ownership. We all know cohabitation, right? You have a roommate, you have a bunch of roommates, and you guys are all paying one rent, right? So you and your roommate are both paying your landlord in that combined money is what the rental payment is. Okay. We all understand that. Well, the same thing is with co-ownership. So let's say you are, senior in college and you need to find housing. Well, there's this house down the street. It's not very expensive, and you already live with roommates. So why not purchase a home all together, and all of you pool your resources, and instead of paying rent, you're paying for a mortgage. And then after the school year, you sell it, or you rent it to other seniors that are looking for a place. So it's a way for you to combine your resources in order to co-own something. You could co-own it with your mother. Okay. So this place has a guest house and your mother needs somewhere to live. All right. Well, why don't we all pitch in on this? We're all on the deed together. We all co-own it, and mom lives in the guest house and we live in the main house. I mean, that's how we bought our first home. We are co-owners on that property. And the great thing is we still own it to this day, and we use it as an investment. So somebody else now is paying that mortgage for all of us. And it's amazing, amazing way to build equity. So if you you know, I mean, in a marriage, this is a normal thing, right? Both of you pool your resources and you go in on the mortgage together. Well, why not pool resources with friends, family? You know, maybe you're buying a different kind of property than you originally thought. Okay. So what if your parents want an investment? They also know that you need a home. Are they more likely to put money towards a single family home for you or towards like a fourplex? You know, why not have that money work for them instead of just saying, oh, Susie Q, we really love you. Here's some money for your first home. Maybe they're going to say, hey, you've been living in an apartment. Let's buy an apartment complex. You can manage it. You can live in one of these units. And then the rest of this money that I've put down towards it is coming back to me in rental payments. So co-ownership can work a variety of different ways. You just got to think outside the box, right? I think the breakdown for a lot of people is defining the American dream narrowly. I want to own my own home. But what does that mean exactly? Why are you wanting to own your own home? You're wanting to own your own home so that you have security, so that you know what your monthly payment is going to be every month, so that you have a roof over your head, so that you're building equity for the future. But what if that doesn't mean owning your own single family home that you're living in, but rather you're owning a piece of a home? You own 90% of it because the company owns the other 10%. Or what if that means that you are a co-owner on a apartment complex? I mean, what I want you to think about is how can you build this dream in a non-conventional way that will get you to the place of security. That's what the dream was designed for anyway. It's a place of security. It's a place of ownership. Maybe that doesn't mean your own house. Maybe that means an investment. So anyway, food for thought on this dreary day in California. I'm going to go take a nap. I wish. No, I'm going to be sending emails and working for my clients because that's what we do as realtors. So to be compliant, I have to give you my spiel. So if you want to sign off before then, goodbye. And I hope you are doing well. My name is Natalie Oman. I'm with Berkshire Hathaway Home Services California Properties, DRE 02085495. Have a wonderful day. Take care.